Hello, I'm Bernard Hickey from Interest.co.nz and welcome to a special Economic Weather Report brought to you in association with Bank of New Zealand. Today we look at figures on GDP growth. This is the big kahuna of all the stats and shows that in the June quarter, GDP rose just 0.1% in New Zealand from the March quarter. Economists had expected growth of 0.5%, so it's quite a disappointing result. Construction and manufacturing were down. Construction obviously with house building at a decade low and not much going on in the centre of town either. Agriculture was up though, as was services. The contribution from exports though was down. Remember, we're running quite a big current account deficit and we saw a lot of overseas travel by New Zealanders over the last year or so. Remember, that strong currency helps. Insurance and banking did quite well. Obviously, insurance premiums have risen, partly as a result of the earthquake. We did see a slide in manufacturing. The strong New Zealand dollar is having an impact there. Tourism exports were also weak. We saw, of course, with the February 22nd earthquake, some people delayed or cancelled their trips to New Zealand, and the ash cloud in June was quite disruptive. That was part of the second quarter. However, economists are saying we're looking ahead into the second half of 2011 and it's looking a bit better. There's quite a bit of spending, of course, around the World Cup, and the Quake recovery spending is starting to flow through, although the Reserve Bank warned last week that it could take some time. Export returns are improving, particularly from dairying. We heard today of a record Fonterra payout and very strong production as well, despite a slow start to the year with a drought. Consumer spending, though, remains relatively weak. Many households are focused on debt repayment. And the global economy is starting to look pretty weak. Chinese output, for example, is slowing for the third month in a row. So what does this all mean for interest rates? Well, the official cash rate is now expected to stay on hold at a record low 2.5% until at least the March quarter. Economists say this number today confirms that outlook for a delay in the hike in the official cash rate. And when it does rise, the Reserve Bank expects it to rise around about 150 basis points, so from 2.5% to about 4%. Remember, floating mortgage rates are about 3% above the official cash rate, so you'd expect floating mortgage rates to rise from about that 5.75% mark to maybe closer to 7%. Now, just one final thing before we finish off, a look at productivity. Economists get very excited about productivity because it's the ultimate measure of how successful an economy is. Remember, it's all very well working harder and longer hours, but unless you're producing more from each hour, you're not actually making much progress. And this measure, and we'll go here to the economy section of our charts and have a look down below at this rather crude measure, I suppose, but it is a pretty good measure of what's happening with productivity in the economy. What we do is measure the amount of output per hours worked, and we can measure that quite accurately up to a recent period. Now, that rather crude measure of productivity shows productivity down 1.1% in the June quarter. We worked quite a bit harder, but our output only rose a little bit. Essentially, we're not quite as productive as we were. I'm Bernard Hickey. That was a special Economic Weather Report brought to you in association with the BNZ.